Miko, how's it going?
Hello, hi.
And then Tushar. All right.
Hey, everybody. Thank you
How
so
you guys
much. I'm glad
doing?
you joined us today. I know you're very,
Yeah.
very busy, and I'm sure that the audience is eager to hear your insights. Let me just give them a quick overview of some of your backgrounds, and then I'll kind of let you do the talking. Okay, so Miko Matsumura is a general partner with GCC Gumi Cryptos Capital, a Silicon Valley investment fund with over 500 million in assets, including early stage investments in unicorns like OpenSea, Yield Guild Games, Celsius Network, Vega Protocol, Credo, Agoric, and Aster and 1inch Network. Tushar Nadkarni is actually from Celsius. They're helping us put on this amazing event. They are a leading cryptocurrency platform serving the financial needs of retail customers, partners, corporate, and institutional clients with a suite of products earning yield, lending, trading, and spending crypto. So thank you both for joining us. We have Michael Arrington joining us shortly. First and foremost, perhaps, where do you see the crypto world in 2030? Or even as far out as 2050? We have a lot of different changes going on and things are looking a little bit dicey. Are you still optimistic? I'm sure you are, but tell me why.
Yeah, I can. Can you guys hear me?
Yeah.
Okay, I can start, and then Miko, you should jump in as well. Miko's been doing cryptos, since before a lot of us knew how to spell crypto. So I want Miko to jump in on this as well. So I don't know, and anything sort of 2030 is as far out as 2025 is or 2050 is. It's all the same. It doesn't really matter, right? I think I'll start with the following, which is if we look at where crypto is today and looking at the near-term trends, there's a lot of volatility, and this happens in most nascent markets where people are trying to figure out monetization models. People are trying to figure out, who the right players are, and how much risk to assess on each of these assets. So I wouldn't be too concerned about the near-term volatility. Those things happen in whenever there's a new market in its nascent form starting to take roots. If we start going, broadly into the overall blockchain world and really the crypto world, which is the killer app on blockchain and Web3 is cryptocurrency and financial services. The way I approach this is looking at industries and looking at a historical arc of industries, right? So I'll approach it from more of like financial services and banking and such. And then Miko can take his point of view. So think about it like how money even started and how banking even started from a historical arc, right? Like people were using different forms of trading currency much before fiat currency evolved and currency of the world evolved. And they were trading a bunch of things and they started assessing value on certain things. So it started with something where it was used with some level of speculation as a store of value. So think about like gold. People were hoarding a lot of gold, thinking like, hey, if I buy it now at a lower price, there'll be a higher chance that there's probably only a limited amount of gold supply in the world. And so if I take some of the gold right now, there's a higher chance that the price of gold will go up. So you start looking at the arc of what people did, and now we're into in the fiat world, the non-crypto world. People are doing exotic derivatives, right? People are investing in robo advisors, right, to manage their wealth and such. So is there a reason that all of that world is not the same world that'll evolve into the crypto side of things for financial services and banking? That's where I see a lot of the evolution. I think the second part is that in Web3 and blockchain, the big promise is that the users control with multiple nodes and multiple validators. Users really are the ones that control a lot of their fate, control where their data is, allows them the freedom to move across, allows entities to not block their access to different funds. So if you now look at this historical arc, and now you see where the world is evolving, think through banking as, initially people were just holding or hodling their Bitcoin and some Ethereum in promises that value is going to go up if for nothing else, that it is an asset that is limited in its nature. And so there'll only be a limited amount of Bitcoin available and minted across the world. And so if I hold the asset, there's a likelihood that the asset goes up. So that's what people were doing. And people are still doing, some people are still doing that, right? But if you take that ahead a lot more, think through what you can do with that asset. So you can deploy it. You can deploy different crypto and get yield on it. You can use it as a governance token now to actually have voting rights in how decisions are made in certain tokens on certain chains. You can use your all of the crypto that you have as collateral, like you do with your fiat currency or your assets in the fiat world, and take a loan on it, like a home equity line. It's not that you're actually taking a loan on the assets you have. You're taking a loan on the equity that you've gotten on your home, and you take a loan on that. So all of those things could be available in the crypto world. Why not, right? And it's just the start of a lot of those things. Now, what we've done, all of us collectively in the crypto world, is we've made it really, really hard for people to do it. Like, we've done this to ourselves, and we should take responsibility. So what are we responsible and accountable for is to make it easy for people, right? We've given ourselves a hall pass, like, oh, great UI UX design. That's not a crypto thing. That's a Web2 thing. We can make a really hacky, super frictiony design and no one will care because people care about the value. And that's not true. If we want the larger generation of the population to really move forward, we have to make it really frictionless for people to be able to move through. So making good UI UX design, and that builds trust. The second thing is easy on-ramping. Like, just simple things. People are getting into all these exotic derivatives and stuff. Do simple thing. How can I get $100 of USD and $100 of euro into $100 of crypto into my account? Simple stuff. That's on-ramps, right? Allow easy fiat on-ramps from the fiat world to the crypto world. And that's a bridge now that you've built into the crypto world. And then I think if we start getting and looking forward, now we have a bunch of things that are very interesting, which is, why do we ask people, hey, how would you like to earn some yield on your crypto interest? Would you like to take a loan on your crypto? Would you like to exchange some of your USD or USDC stablecoins into Bitcoin, meaning exchanges buy Bitcoin? Why don't we just ask them a simple question? What is your retirement gap? What do you want to do with your crypto? What do you want to do with your assets? What's your risk profile? How much risk do you want to take? Like, do you have 5 years of, and do you want to take a risk on 1 to 10, a 9 risk, and you have like a 5-year timeline? And then just don't worry about it. We've got all the AI and bots in the background and robos in the background that'll actually tell you how to distribute and buy at the same. So you get your dollar cost averaging, you get your sale at the right time. So all of these things that you do in traditional wealth services, wealth management, banking, financial services, asset management, investment management, all of those could be easily translated into the crypto world. And we don't have to look out to 2030. It's happening now. It's happening now in the next 12 to 24 months. I'll stop there. Miko, if you want to jump in.
Sure. 2030 is definitely a good ways out, but I think it's important to try to understand where we are. So, if you think about 2030, like, it's interesting to reflect on 10-year cycles, right? If you think about 10-year cycles are really what venture firms bet on. So a venture fund is sort of typically on a 10-year cycle, right? So a lot of people tend to trade on a tick by tick cycle, right? So they look at prices and they're like, oh my God, the prices have changed, right? So if you look at the venture market, right, what we've got a wall of venture capital coming, right? So we've got, Andreessen Horowitz with $4.5 billion, and, you got your FTXs, your Paradigms, like you've got many, Kitty Hahn, like you've got many, many, many multi-billion-dollar venture funds, right? So from the perspective of the 10-year cycle, I think what people are projecting is they're really projecting the Web3, right? So I think Web3 is kind of pretty much a sure thing. And the reason why I would argue that is that we have this kind of disruptive network effect, right? So because of that, what we know, I think factually, is we know that like Web2 is broken, right? Like Zuck doesn't want to work for a Facebook, right? And I guess Cheryl doesn't want to work for that either, and Jack Dorsey doesn't want to work for Twitter, and so the Web2, creators are running away from their creation, right? So, what seems certain is kind of Web3 is certain, right? So, and it's because of people want ownership, they want kind of, and I think ownership includes a bunch of things that they kind of maybe don't really provably want, but they'll love when they get it, right? Which is they don't provably want privacy, but they will love it when they get it. They do love incentives. So, people will be incentivized, and when you think about this cycle, the thing that I think people are a little disturbed by right now is, obviously we're all disturbed by COVID. COVID's basically a once in 100-year pandemic. So I think, within that time window, we'll have kind of managed it quite well. So I think that will be good. I think the critical hinge on the future really relates to energy and energy supply, which is outside of the realm of Bitcoin. But, I'm optimistic about stuff that's being done in fusion energy, but of course, fusion energy is really interesting because it actually changes the price and the dynamics of things like proof of work, right? So, I think one of the great things about the consensus layer is I think proof of stake will probably be it. And it isn't a function of betting on the merge, which I do think is super important, and I think it's going to work actually. But I think the thing I'm really interested in is that there have been really existing proof of stake networks in the 1.5 gen, like things like Tezos, which are big enough that they would have been hacked by now. They would have been hacked, so they haven't been hacked, right? So it feels like the consensus ship has sailed, and it feels like proof of stake is going to work, and that's good. I think if we have incredibly abundant electricity from fusion, I think proof of stake or proof of work will be interesting. It'll be interesting where what happens in a world of incredibly abundant and cheap electricity. How does that affect proof of work? So so I think those if you get the energy, then you get a much more optimistic and abundant future. I could certainly talk about geopolitics, but I think I want to focus a bit on our industry.
I think on the mining bit though, Miko, that one of the things that that I often think about, and as we get into different alternate energies and things like that, are we getting into a world where the whole genesis of having these sort of multiple fragmented people now, are they going to be consolidated into a handful of large, maybe even publicly traded companies that own the mining of certain proof of work?
It's a great question. I think there is definitely incredible economies of scale with respect to consolidation. But I do think that there is a social benefit. So I think in the long run, the metastable position will be probably things like government mining. So I think that will probably end up being a part of the steady state.
Yeah.
So do we have Michael here? Michael, are you joining us? I know we can't see you.
I'm here.
Oh, great. Okay. Well, for those of you who aren't familiar with Michael, I think we'll just bring you into the conversation. We'll hopefully get the video working at some point. But Michael is the founder of TechCrunch, Crunchbase, and Arrington Capital. He's a leader, a mentor, and a performance manager with talent in strategic planning and implementation. So what we've been talking about is, what does the world look like in 2030? And in 2050, is there a change? Oh, well, we're not going to find out from him today. So anyway, guys, let's move on to the next question, unless you had some other points that you wanted to go over internally that was sparked.
Go ahead.
Go ahead.
Okay. I'm interested, I think we're all interested in how Bitcoin has recently fallen, and there are all these global events. I always thought that this is when Bitcoin would have its time to shine, and it's not exactly what's happening. What do you predict in the short term? And do you think that we can depend on previous market cycles because things are so different than they are in the past?
So I'm a proponent of what I call the third animal spirit. So, John Maynard Keynes actually invented the bull and the bear effectively and as animal spirit. So, I'm a believer in the honey badger, which is basically the spirit of the honey badger is it figures out exactly what you think is going to happen and it does the exact opposite. So, so I think, that it's a deliberately perverse mechanism, and I think it's really just people counter trading, but I think it's a genuine third animal spirit. It's a contrarian animal spirit. So, I think all of our short-term predictions kind of should be taken with a big grain of salt.
What do you think,
Yeah.
Tushar?
Yeah, I tend to agree with that as well. I think, and then my other point is, look, in nascent industries, which I think we're still in general, blockchain, Web3, crypto, we're still in a very nascent part of the industry, and in this industry, it's not unusual. It's not it's not unusual really to have these large swings of volatility as people are trying to figure out where their place is, where they feel the right value of the asset is, where they feel their monetization models are. And in certain cases, you'll have, if you look at this largely as an industry, I'd break out the industry, especially in its early stages, into 4 distinct types of companies or types of projects that exist. The first project is, and everyone feels like they're in the first bucket. They're really not, but everyone feels like they're definitely in this first bucket. And that's like mission-driven founders with a clear thought, clear clarity of monetization, clarity of their mission, all of that. The second one is opportunistic folks that are more mercenaries that see the opportunity there. And there's no shame in this, right? Like you see there's a market to be made and money to be made, and you jump in. The third one are people that don't quite have clarity of monetization, clarity of a model, and they're just there as being pretenders, but they're just in the mix. And then the fourth are really the bad actors, like scammers and people that create schemes specifically in these early markets to be able to get quick money out of certain people that are not quite fully educated, right? So when certain aspects like the market downturn that we're seeing right now, a lot of the category 2, category 3, and category 4 get washed out because the tide is low. When the tide is high, you can't really tell the difference really well between these 4 categories. Everyone feels like they're kind of number one, but they're not. And when the tide is down, that's when you get a way of taking some of these 2, 3, and 4 pretenders or people that are not clear or people that are just mercenaries out of the market. So I don't think they're really bad for the industry in general, because what comes out at the end are people that are mission driven, that even in downturns are so committed to the mission that they'll continue to go and continue to push forward. So those are I think values in certain cases like this. I know I took it to a slightly different angle than like looking at Bitcoin pricing specifically, but when I think about these kind of market downturns, that's the thing that comes to mind, which is the people that will survive may actually make the industry and the overall landscape even stronger and more with more conviction.
I guess I was more concerned not as much about the price, but about the government sort of upping the ante right now. Things have just become a lot more intense. Michael, are you with us right now?
I'm so with you. I'm right here.
Excellent. Yeah. So maybe, what do you think? Price is important to some people, but what do you think the future of crypto looks like in the short term? Are we going to have problems with government intervention? How does it look 10, 20, 30 years out?
30 years out. I think anybody can predict 18 months out is, among the 1% of the 1%. Nobody can see out more than a couple of years. Not even Steve Jobs could see out that far. But we're definitely in a downturn right now, but it's different than last time. Last time it was driven by a blow off top in crypto, and we had that in late 2017 and the first week of 2018. We had a blow off top and we went into a winter for, well over a year, really 2 years. So I think in those cases, yeah, you have a situation where a lot of the bullshit leaves the industry. It takes a little while, though. I agree with you guys, but it does take a little while. There's still bullshit. Valuations come down, which is great for investors. It's healthier. People don't blow money on yacht parties and all that stuff. But this is a little different because we had no blow off top. We had nothing close to a blow off top. All the models last year anticipated a blow off top in the $150,000 range for Bitcoin. And, ETH being 0.1 of that or 0.15 or even 0.2 of that. We got nowhere near any of that. So we had, we just didn't have the blow off top and, for whatever reason, but clearly the economy got overheated. The Fed came in and shit all over everything. And that's what's driving this now. It's all Fed driven, 100% Fed driven. Luna didn't help, but what happened to Luna, probably exposed weaknesses because of the stress put on by the Fed. The Fed is going to stop because the Fed can't keep doing what they're doing. We don't know when, but end of summer, early Q4, they have to begin the loosening cycle, or else they're going they're going to have problems with their debt auctions. I mean, it's just clear. So in the fight between sovereign debt and inflation, sovereign debt has to win. When that happens, we're right back in it. And I think this could be something where 6 or 7 months from now, we look back, we're like, we barely even remember this happening, except Luna investors will definitely remember what happened. And if that happens, I don't think we have enough time to clear out all the bullshit, and we'll still have all the bullshit. So I don't really know what's going on, but right now I spend more time looking at macroeconomic indicators than I do at anything else. And a year ago, I barely looked at macroeconomic indicators.
Great, thank you. What do you think about DAOs? Do you think that they'll be replacing companies, nonprofits, governments? People have been talking about it a lot lately, but in practicality, do you see that happening?
That one's a very hot topic for me recently, right? Because we're early seed stage investors in Yield Guild, which is a large DAO. And right now what has happened as an incident is that they invested in another DAO called Merit Circle, which is another guild. And what happened is that recently the Merit Circle DAO basically voted as a DAO to rip up the investment contract. Right. So what's happening is that a DAO is now being used as because of censorship resistant currencies, blockchain assets, a DAO is now being used as an instrument of legal evasion. And it's unclear the legal relationship between the DAO and the company that signed the contract. Right. So it's as if the board of the company went to some random person and said, would you like to vote to do something random with my company? Like they just handed the keys to the DAO, which has a very uncertain legal relationship to the company, right? So in that case, what it means is that investors probably can't trust DAOs, and what they should do is they can invest in smart contracts, right? So a DAO can put up a smart contract and offer that, because then you can't renege on a smart contract because it's code, right? So I think the idea that a DAO can vote to breach legal contracts makes DAOs pretty bad investments, but smart contracts can be good investments, and the money can go into a DAO. So I like DAOs. I just think this kind of destructive behavior is bad for the trust.
Yeah, I'm very little to add on top of that. I was going to make the exact same point, which is to say that the pro of a DAO is that it's decentralized. The con of a DAO is that it's decentralized. And that's essentially what happens in a lot of the decision making. I think the point that it is decentralized and it is power to each of the governance token holders gives it this power to actually operate as a decentralized entity, but make the right decisions, right? When investors are coming in, and that's when the real adoption happens. That's when real liquidity starts going into projects that are going to define the next wave of, financial services, other killer apps that are going to be on the DAO. Not having the certainty of moving in the direction that you expect the DAO, the foundation, or the projects to move in, that level of uncertainty is going to cause friction for more money and liquidity to come into the DAO. And I think that's essentially the point that Miko is making.
Michael, how do you feel about DAOs?
DAOs can mean so many different things that I don't know how I feel about them. There is a lot of democracy in DAOs. And democracy doesn't actually work very well sometimes. You need an autocrat for good or ill sometimes, and autocrats create wealth. DAOs can be structured so there is an autocrat, and they can work out great or very badly if the autocrat is evil or sucks. But DAOs, they have all the problems of democracy, and so Miko's point is a good one as well. Is that we all want to avoid regulation for the most part because it's friction, but without regulation, all kinds of nonsense can be accomplished by somebody who's just motivated to spend the time doing it, because most of us don't have a lot of attention to pay to things. So when we have participated in DAOs, sounds like similar to Miko, where they're more like investment clubs, but it's just with people we know and trust, and they work out great. It's really just a sort of a quick partnership, if anything. But there's a lot of bullshit with DAOs. 90% of them are less than worthless.
Yeah, I always kind of wondered, well, who's the boss? I guess that wasn't part of the deal,
Right.
but
And
yeah.
you need a boss. I mean, you don't
Yeah.
need a boss. Like if you're just managing something, where it's just for stability and long term, like nothing happens, sure. But if you want somebody doing something bold, there's a reason why in startup land we talk about, a camel is a horse designed by committee, and DAOs are committees. And so, you want a horse, you don't want a camel usually. And so you got a structure for that. I love autocracies. I love them. I mean, Steve Jobs, look what he accomplished, right? He had a lot of flaws, but Apple under anyone else doesn't work.
I think for me, like, I think autocracy probably should have some form of limitation. I definitely think a framework of rules can be beneficial. But what I would say to kind of couch that is that, definitely kind of DAO by random people doesn't really work. People vote for all kinds of nonsensical things, and I do think leadership does matter, and I think smart contracts matter. I think, if you put things into contracts, then you don't really need law. I mean, obviously governance is updating those contracts, right? So it's not a panacea, so I agree with what Michael was saying about doing something bold, because bold things require changes, and changes require governance, and governance requires some kind of human intervention, which I think it can be very fraught. So, but I think if you have smart contracts, you can lean into that. And, if you look at something like Constitution DAO, like, it succeeded at bidding, right? It didn't succeed at winning the Constitution copy, but it succeeded at bidding, right? So as a coordination point for a bunch of strangers doing a thing, I guess it worked, right? They put in the bid. They just didn't win the bid.
Well, it also had the problem of it being public and decentralized. Everybody knew exactly how much money they had, which is a problem in an auction, right? So, we'll see experimentation here, and DAOs have their place, and a lot of normal legal structures can be replaced with DAOs. And a DAO, like I said before, can mean many different things. And my biggest fear is, like with smart contracts, there's exploits, and we're going to have years of working this out. And it's just, evil people who have evil intentions can always find something to exploit with these things. And you don't have courts and humans making judgment calls for obvious reasons, but that means that you have strict letter of the law interpretation, and in fact it's a computer just generating the consequences, and it has its place. But sometimes courts are good.
Yes.
I mean, if Miko wants to sue all of his guys that he invested with, how's he going to do that with the DAO?
Yep, fair enough.
Well, recently we saw, of course, the surging power of the NFT. It is also a JPEG. Some people make fun of it. Some people think this is a really big advancement. How do you guys feel about NFTs? Do you think that there's a future there, and what does that look like?
I mean, we're seed stage into OpenSea. We definitely remain very bullish on this structure. I think absolutely, even more than fungible tokens, the number of kind of things that will probably not have value, there's probably even a larger percentage of like 99.99%. But like, from the perspective of, do we think that there is a durable value to be had here? Like, for sure, we think that, fungible tokens represent financial inclusion and financial tribalism, right? So we think that NFTs will represent effectively narrative inclusion, right? So if you have what you have is you have sort of the quantitative and the qualitative side, right? So we think that it's already doing that, and we think it'll do it quite more. So in a sense, like you could look at that as the future of maybe media and media distribution. So it's a channel type of thing.
Yeah, that's where I would go as well, which is rather than commenting on the specific NFT and Bored Apes and things like that, I think if you look at the ecosystem in which non-fungible tokens can exist, right? Whether it's a trading platform, whether it's data science that goes behind it, and then augmenting that data and getting insights from it, there's really a large amount of opportunity right there. If you just look at exchanges for fungible tokens, this would be essentially an exchange or a marketplace or all the entire ecosystem for non-fungible tokens. Now, there are specific, now when you get down to the specific NFT level, is it, value and beauty lies in the hands of the beholder. And that's where you'll start seeing difference in opinions on values assigned to an NFT. I think there's this burgeoning business model around NFTs where can you use an NFT as an asset and do things with it, right? Which is, can you take a loan on an NFT and with the a loan and use it in the fiat world, right? And do stuff with it while you're just preserving it as an asset, right? And that's where people start getting into, in my mind, personally, into a lot of trouble, because the value assigned to this specific asset has a high volatility right now, and really no one knows it until it goes on the open market what the value of that NFT is at any given point.
I have like a couple little things to add, but not much. Whenever anybody says NFTs, the first thing I think of is artwork. And obviously it means so much more, but it's still, that's what I think of is, a Bored Ape or something. And those things are great. They have the value that they're going to have. But there's so much more to NFTs, and like what Proppy is doing is so cool, because it allows for you to buy a house as easily, literally as easy as it is to buy a NFT, because a NFT has rights over the physical house. And there's just an unlimited number of things that NFTs can replace and remove the friction of selling something. And it can absolutely be a real world item. I mean, real estate's particularly good for it because real estate can't be faked. It doesn't move, I don't think. It's just a fantastic use case. But you can imagine all kinds of other things. And then you've got decentralized and dispersed ownership of things, virtual goods like songs. You have DFCs, the song that owns itself is super cool. And I love the experimentation here. Now, we have failed to make much money in buying art, but we've done a really good job of making money on we didn't do OpenSea like Miko, but we've done things like Immutable and other picks and shovels for NFTs that have been just fantastic. And we're excited by it. I'm way more excited by NFTs than anything else in the space, because we do DeFi and we're good at it, but like it's boring to me. I probably shouldn't say that, but NFTs are fun. They're exciting. They're interesting. They're cool, and they're toys and they're not toys. And so I have a lot of excitement around it.
And one other thing to that, Michael, is like it actually brings a completely new set of folks into the crypto space, right? Mm-hmm. Or into the Web3 and blockchain space, right? Artists, like you can also imagine tokenization of things like the Chicago Bulls own the complete rights, say, to Jordan's last shot to get the 6th championship, right, for the Bulls.
Yeah, and
that could be tokenized, and someone could actually own that last shot, right? And there's no other way to sell that on the open markets other than making it into an NFT and then tokenizing it and putting it on the market, right? So there's so many of these applications beyond just Bored Apes that the NFT umbrella can do. And now it's getting like artists and songwriters into the Web3 and blockchain space. So I think I'm most excited about that, which is if you think about adoption and how retail folks first adopted it, the 99% first adopted this big asset class. Then you got the institutions sort of coming in and venture capitalists coming in. And now you've got this like completely new set of creative artists and creators coming into the blockchain space.
I concur. As an early adopter of Tatiana coin and artist coins and things like that, it's been really nice to see everything growing. And I'll be doing some music ones combined with art later this year. So that'll be fun. Gentlemen, I think we're around the point where we have to wrap it up. We've got another speaker coming up. However, I wanted to encourage you to please join the sidebar. There's some networking options where people can talk to you one-on-one. And then there's also, of course, this comment section. Before we sign off, is there anything else that you'd like to say to our audience? And of course, thank you very much for making time out of your busy day.
I just want to briefly mention that it's nice to be on a panel with friends. And, you know, sorry, Michael's video didn't work, so I can't say it was great.
I'm being censored somehow. My camera's on. Like it was just, and I'm
Really?
my beautiful face. Nobody gets to see it.
No,
Yeah,
we were just gonna say, Miko, like that works in our favor. That just makes us look so much better than if Michael was on camera.
Well, it's great to occupy the same space as friends. So, you know, nice to be with you all.
Hopefully,
this event in 2018.
Right.
The first year of this event was what month? Anyway, that was a fun event in San Francisco, and I look forward to these being physical again.
Physically, yeah. The only thing I'll you know, tell the people that are on the live stream right now is there are some people that are, you know, DeFi curious, some people that are just crypto curious and NFT curious and stuff, and they always ask, like, you know, what can I do to get in? And I'm like, just go do it, right? And it can be anything. You don't have to like get a little, I don't know, if you're really super into crypto and you want to get into mining, get yourself an S9. Like, I don't know, they're going on eBay, miners for, I don't know, $300, $400, like mine Bitcoin if you really want to go that route. If you want to get into DeFi, go and be a part of projects, right? Like help out people. You don't even have to have a physical contract or anything like that. Go beyond just, you know, going on an exchange and buying some Bitcoin and Ethereum and forgetting about it. Like, be actually involved into the community and like moving blockchain and crypto forward.
Yeah.
Awesome. Good vibes, everybody. Wonderful way to start the event. Please join everyone in the comment section. I appreciate your time and look forward to seeing you all in person.